Gold just fell 5%. That's roughly $600 billion wiped out from a $12 trillion market. But here's the question almost no one's asking. Why did this happen now? At the very moment gold sold off, the governor of the Bank of England, Andrew Bailey, told Parliament that 2 US company failures could be a canary in the coal mine. He said the alarm bells were ringing across the financial system. Those companies, a subprime car lender called Tricolor and a car parts supplier called First Brands, had borrowed heavily through private credit markets. In other words, not from traditional banks, but from the new world of shadow finance, private equity, hedge funds, and non-bank lenders. Bailey admitted that the Bank of England was starting to see the same kind of slicing, dicing, and tranching of debt that happened before the 2008 crash. That's when risky loans were packaged and sold off to investors who thought they were safe. Jamie Dimon, the head of JP Morgan Chase, also commented last week. He said, when you see one cockroach, there are probably more. That's banker speak for this might just be the beginning. Now let's connect this to the gold market. When institutions face sudden margin calls or credit losses, they don't sell their worst assets. They sell their most liquid ones, and that's gold. So what looks like a random crash is often a forced liquidation, a dash for cash to plug holes elsewhere in the system. Gold didn't fall because the economy is strong or inflation is beaten. It fell because someone needed dollars fast, and that fits perfectly with what's happening in the background. A tightening liquidity cycle, weak private credit markets, and growing stress in high-yield debt. The Bank of England is already planning to stress test private credit firms, which tells you this isn't a small issue. The same leverage that nearly broke the system in 2008 has just shifted from mortgages to corporate and consumer lending. Different asset class, same structure, same fragility. So when gold drops on a day with no strong data, no rate hike, and no news that justifies it, that's your signal. Something in the financial plumbing has cracked, and the people at the top know it. When Andrew Bailey says the alarm bells are ringing, you can take that literally. And if history teaches us anything, when the canary dies, it's time to get out of the mine. If you like this video, don't forget to like and subscribe to IBF channel.